It's tough to be a bear these days with a miss and jolts and a significant downward revision in the non-farm payroll for July and just an 18,000 jobs better than expected result for August. Add to that, target rate probabilities are firmly, and I do mean firmly, the highest they've been for the hold in September. And get this, gang, you go out to November. Guess what column now is suggesting the highest probability? Pause. What about December? This is where the pause has once again started to pull away from the hike column, right? That yellow column being taller represents the pause, right? That would represent staying at the 5.25% to 5.5% target rate probability. It is hard being a bear right now. The data is simply not supporting it. Forget the data. Let's look at the trends, all right? So I'm Raghee Horner. For those of you that don't know me, I'm the lead trader of the Sector Secrets Mastery Room as well as the Futures Room. And let me just state the obvious. And I know if you've been following these free videos for a while, if you've been following me at Charts and Coffee for a while, you know what I'm about to say, and that's great. But for those of you that have been maybe a little too influenced by the fear-mongering out there, this is about as bullish as an index gets. This is the Russell. This is where we started the year. This is where we are now. It may not be pretty, but it is higher than where we started the year. Okay, and this is about as unbullish as something gets. Let's take a look at the S&P, the fan favorite index. This is where the S&P started the year. This is where it is now. What on earth is bearish about this kind of move? Absolutely nothing, if you're asking yourself. There's nothing bearish about it. And in terms of the uncertainty around September, look, I'm the first to admit there's always something around the corner that we cannot account for that could suddenly be the dark at the top of the stairs and the monster under the bed. That's not trading, though, right? Is it? So let's talk about some seasonal tendencies. All right. Now, the way that I'm going to deal with the seasonal uncertainty of the way in which the S&P tends to sometimes be in September. Take a look at August. This is the chop that we've been dealing with. Take a look at the chop that we could see towards the end of September throughout August. And then we have this, which I know is getting a lot of folks' attention, that tendency for possibly a move lower. The data does not suggest that the Federal Reserve is suddenly going to be more hawkish. All right? Inflation data was flat. Jobs data was weak. That spells flat inflation and bad news for the economy from the jobs perspective, from the employment perspective. And if that's the case, there's no way that the Federal Reserve in light of jobs can come out next week, come out in September, at least based on a flat inflation number, their very favorite PCE, and say we need to be more hawkish than you think we might be, which right now is at worst a 1/4 point hike. Right now, the probability is for nothing. Okay. So what do we do, right? Okay, I've set the scene. Hopefully I've set the scene with data and price and trends, but what do we do in this environment? Well, I'll tell you what I've been doing in this environment. Throughout August, most of my trading, especially the second half of August, I'd say the last half to maybe 2/3 of August, has been short-term time frames. Because when I don't trust what happens next, when I don't see clear trends, when I don't know whether or not the Federal Reserve monetary policy is going to shift on a dime, I keep things short term, right? Or as I like to call them, boring day trades. All right, so let's talk about what boring day trades are. I'm going to give you some examples from just today, September 1st. All right, so this is what we did. This is not what I'm thinking. This is not what I'm talking about. This is not what I'm speculating, right? When we talk about these videos and these updates, I am talking my book because frankly, who cares unless I have an open position on, right? Or unless this is what I'm trading. The most bullish this morning index was actually the Russell in terms of structure. And by that, I mean, take a look at the bell and the way in which price sunk into the hourly price movement range, not only from the 9 to 10 o'clock zone, but the 10 to 11 o'clock zone. After it sunk into the green, it went right up into the resistance of the red. That's the way these are designed to work. These are historical volatility levels projecting where resistance and support could be based on time of day and the volatility associated with 9 to 10, then with 10 to 11. So every hour, these zones either narrow or expand based on historical volatility. Most traders simply don't see this because they don't know that volatility-based support and resistance exist. It does on these charts and on these charts only. I created this process. This is what's getting charted on my 5-minute day trading charts. Now, I will say that the Russell is pretty good as this was. There was a brief time based on structure that the Russell got a little wobbly. Nothing wrong with that. But it's just not as strong a trend as the Russell's number one sector showed, right? Here's a number one sector in the Russell. And when I have these green colored grab candles and I have a green structure on the multi-trend, the lower row is the trend, the upper row is the momentum. When I've got this gorgeous green, I want to be a buyer. And that's exactly what we did. We looked for opportunities to get long in zones related to these hourly price movement ranges. This is the HPMR. The aggro component to it are these dashed lines called the LHPMR, right? It's the LHPMR. And the LHPMRs give us a more aggressive place to look for buys when the overall market is structured bullishly. Again, all color-coded. That's what works for me. So KRE was a great one. Let me point out a couple other places. Dow was pretty resilient. It was not an uptrend to kick off the morning. In fact, it never turned into an uptrend at all today. But if I think about what the Dow is composed of, I remember that it's composed of the financials. Financials started off pretty strong today. It's got healthcare in it, right? Healthcare really wasn't all that, it was kind of wobbly to start, right? But you know what was on fuego? Energy. Why was energy moving? I love when Dow futures and crude oil futures are both either strong or at least supported. And this is what crude oil looked like. When crude oil is heading straight up, we want to take advantage of moves in energy sectors and energy stocks. It could be XLE, it could be OIH, it could be XOP, it could be stocks like Chevron, Exxon, Schlumberger, Halliburton, etc. Right? There's a lot of choices here as long as we focus on the relative outperformer. And that's another thing that we did, Exxon. World's most boring day trades. Find things that are already structured bullishly and buy them when they sink into zones that suggest that we could see follow through, right? And that's the green HPMR. But notice how everything works together, right? Everything works together for this approach. And this is what boring day trades look like. Now on, I believe it's Wednesday. I don't have a link for you. That's all right. You'll get the email later. We'll talk about it in Charts and Coffee. But I believe this coming Wednesday, and that would be the 6th. All right. I've got a class on the 9th, but I want to make sure that this is right for you. And I'm going to have another webinar. We got great reviews from the webinar that we did on the 30th of August. For an hour, I taught the sequence. I went right into it. Use this to do this. This is what we're waiting for on. This is what it should look like. Right? Went right through the sequence on about, a dozen examples. I'm gonna show you what we did in August. And in August, I didn't double my account. I tried. I really wanted to. I definitely tried. I got very close to it though. And what I'm going to show you is how I nearly doubled an account through arguably the worst trading month historically of the year and some of the worst chop that we've seen this year. And this is my day trading account. Right? So we'll get into that on Wednesday. Because you might say, well, Rog, how did you do? I'm going to break down all the numbers. I did break down a lot of stats in the first webinar. I'm going to follow that up with even more in this next webinar with the class again on the 9th. If you're ready to take the class, and if you want the HPMRs on your screen, simplertrading.com/clarity. I love this URL, clarity. So simplertrading.com/clarity. All right, that's what I've got for you. Keep the time frame short. This is not a bearish environment. Some stocks are more bullish than others. I've shown you why I'm bullish. I've shown you the target rate probability data, but we still have that uncertainty lurking with seasonal tendencies in September. So let's stay ready, right? Let's not have to get ready. Let's stay ready. Short-term time frames, 5-minute, boring day trades. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, Subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.